Everybody's going to be talking about the SpaceX IPO and how it went and et cetera, et cetera. We'll get to that in a minute. We decided that this week we're going to go a different route and we're going to go a little bit more correlation to show what's been working, why it's been working, and why are we where we are right now. In front of you right now, you're going to see a correlation-based chart. It's a line chart. The white line represents the SOX. The green line represents the NDX. The red line represents the S&P, and the blue line represents the NYSE FANG. Why are we bringing this up? We want to show what has actually been driving the market now. Everybody has this thing about new all-time highs, or are we going to fall back down? War's over, war's on, et cetera, et cetera. The reality is you have to deal with facts. So let's deal with the facts that are in front of us. Right now, if you look from the April lows until today, you can see what has basically been driving us. It's this white line. It's the semis, the SOX. You can see it's very obvious what's been driving us. If you look, you can see the NYSE FANG, as a matter of fact, is the actual only index that is really lagging in terms of direction. What do we mean by that? If you look at the slope right here, you'll notice that it's sloping down. S&P sloping up, NDX sloping up, SOX sloping up. However, the NYSE FANG is sloping down. Is that giving us a clue? Maybe not. We'll figure that out as time progresses. We are going to be coming into earnings in about a month or so, so we've got a little bit of time. So right now, with SpaceX out of the way, there really isn't any more catalysts from a stock perspective to kind of drive things. Obviously, there's always a deal that could come out, but from an overall stock perspective of a catalyst, you really don't have it. So with this going on, you can clearly see that the SMH has really been the index that's been driving us up, no matter what. There's no other way to cut. The SMH has really been the one that's been driving us. Now, you can make, depending on your platform, you can make these correlation-based charts to have some kind of idea of what's actually driving things. They're very helpful because they give you a little bit more of a under the hood view of what is actually happening. So we think that this is probably the best chart you could look at right now. We always say the NYSE FANG is our go-to index. It is giving us clues, but the clues right now are a little bit more mixed. This could flip and go back up, which just really all depends because remember, the NYSE FANG has 10 names. So it has Apple in it. You can go through the list, but it has Apple, Google, Microsoft, Amazon, Palantir, Micron, et cetera, et cetera. We're not going to waste time with that. You can do that on your own. We have a video, which we'll link to the bottom, describing the NYSE FANG, what it does, why it's important. But for right now, the index that you need to focus on more than anything else is the SMH or the SOX. So let's go look at that quickly, and then we'll go to the other things. When you look at the SOX, we haven't gotten back up to the all-time high at 1400. We're basically there. If everything goes the way we were going last week towards the end of the week, we're probably going to be there by midweek. We'll probably take that again, make a new all-time high. Right now, what's constructive is holding this area right here at about 13, let's say 13,100. As a matter of fact, let's make this a little bit more tradable. So we'll go either, some guys like to look at the SMH, some guys like to look at the SOXL. We'll look at the SOX, and we'll just base everything off of that. In order to get more constructive with the SOXL, you're going to really want to see us get above this area, this high, which is about roughly 242, 243. Anything above this, that sends it, it's clear as day. That's right now your resistance one. We get through here, you're basically going to get up to this high over here at 284.5 rather quickly. We don't think that this high over here, which would be resistance 2 of 267.08, or this high of 274.50, which would be resistance 3. We don't think these are going to be meaningful. We think we're just going to blast through it. So it's something to watch. Now, your floor for support that you'll be trading against this low over here is about 210-ish, 210, 205. You have a big range here. Granted, it's rather wide, but on a $200 instrument that can get going as triple leveraged, once this thing gets going, it could get going in a hurry. If you don't want that triple leveraged, you can go to the SMH, which is the regular standard ETF. Granted, it doesn't have the same amount of juice. It's a little bit higher, but it doesn't have the same amount of juice because it's not triple levered. So there's something else to keep in mind. If you're trading that, you'll be looking at 615 as your support area, 615, 610, like this area over here. We're much higher now, and the SMH is looking like it wants to go. We don't think that these highs over here are going to be meaningful. We think it will take out and make a new all-time high at 642.77. We think that once this gets going past 635-ish, this is going to just rocket. And we just think that within the next 2-3 days, possible 4. And if things really don't go really well, then probably it takes a week. This will probably make a new all-time high. So it's something to keep on your radar. It is driving. Now let's just get to the more higher end indices and see where they are. S&P, we held the 50, we bounced, we basically filled the gap, and then we went. We really need to get above 7,500. That's really going to be the spot we're going to really need to get above and hold in order to really get some momentum going. We take out 75, we're probably going to start moving up in an aggressive manner. If for whatever reason we get rejected over here, because we're really sitting at the 821, if we get rejected over here, then another test of the 50, we're probably going to break it. And we would not be shocked. We would not be shocked if we try to test this breakout level at around 7,000-ish, 7,050 in the ES futures. That's only if this doesn't hold. If we break, we fall back down, we take out the 50 because we think if we fall back down, the next test of the 50, we're not going to hold. If we do hold this 821, if we start to push up, and to a large extent, path of least resistance is up. Now, obviously, with everything that's going on over the weekend with the news, there could be a situation where we have a massive gap up. We shall see. It's very hard to forecast this type of thing because even if you have a gap up in futures, you have to see where the stocks are tomorrow. They may start selling them off anyway and just take profit. So we wouldn't be getting all super duper excited if you see futures are up by big amounts tonight. Take it for what it is. We could be up 1%, we could be down 1%, we could be flat. It is what it is. We'll deal with it. Okay, so that's S&P. Let's look at NDX quickly. We're going to blaze through this stuff. NDX, same thing. We got down, held the gap tight into the 50. We held, we bounced. This did not try and retest the 50 again. It was that one-shot deal, and we went. We think that if we can get above 30,000 again, that probably will rocket us. If we can get above it and hold, because we clearly now are above the 821. So it looks like momentum is coming back into this. So as long as it stays above that, you could be tactically long. If we break it, you got to be a little more careful. NYSE FANG, we'll look at that quickly. Not looking as awesome. Again, we'll get into some of the names to understand why, but it's not looking as great. It's not really giving clues on the bullish side. If the market starts to go, it may drag this up with it. We shall see. This has been a little bit more on the squishy side since we had that move back down. A lot of it had to do with SpaceX and the rebalancing. One thing to understand is that SpaceX will be going into the NDX within about 15 days. So NYSE FANG is going to get adjusted to have the SpaceX in it, as well as a lot of these names, because they had to readjust or index managers had to adjust. NYSE FANG may not give clues for a little bit of time until SpaceX goes into it. Okay. So as we get closer and closer, we'll talk about it. But for now, just something to kind of keep in the back of your mind. That the NYSE FANG will lag because they had to make room. Index managers had to make room for SpaceX, which is going into the NDX in about 15 days. Let's look at some of the names and then we'll get into commodities. Okay. Apple holding the 50, multiple touches for right now. It is holding. If it can get above Friday's highs, then we get a reclaim of the 821. That would be constructive. For now, you can trade against the 50. Just be careful, because if this doesn't hold, just get out of the way, because if it doesn't hold, we're going down to 280. And if that doesn't hold, you're looking at about 275, 270-ish is where we're probably going to go. So right now, it's very shaky. Okay, let's look at Google. We'll look at some of these names. We're going to go through them very quickly. Okay, Google holding the 50. It's making a little bit of a shelf. It's probably going to pop. We'll see. Most people are looking at it going, oh, it's probably going to go down. We're holding the gap. So, or at least we got in, we filled the gap, and we're holding the gap fill. So we'll see if this 350 can hold. If this 350 can hold, then we think a reclaim of 365, 370 is in the cards, and then it should be trying to push back up to the 400. We shall see. Amazon not looking as well. This is probably going to try and make another touch towards the 200. If it doesn't hold the 200, where are you going? You're going to move down to 220. And if that doesn't hold, then you know where the next level is. Is it 215, 214 for the gap fill? We think the 200 will hold. We shall see. If it doesn't, just get out of the way. Okay, let's look at a name that everybody was focused on this week, SNDK. It's very hard to buy this. Number one, At $1,900 or almost $2,000, how many shares are you actually going to really buy? Now, we know a lot of people will say we go into the option market and et cetera, blah, 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 blah. It's a $2,000 name. What are you looking for over here? Could it keep going? Obviously, it could keep going. The chart looks great. But again, are there better places to be, safer places to be? Yes. If you want to gamble, at this point, it's a gambling stock. There's not much more you could say about this. Does the chart pattern look good? Yeah, the chart pattern looks good. Can't sit here and say that it doesn't. Can't sit here and say, okay, short this thing. No, we don't think it's short. But realistically, at $2,000, how many shares are you buying? And if you're buying options and you're playing the option game, good luck with that as well. Again, it's a $2,000 name. So what really are you doing here with this? A lot of people who are going to say, I could just sell puts or buy calls, etc., or do whatever you want, whatever strategy you want to do with this. There's just better places to be. Just because it's $2,000 is not a reason to be in it. There's a lot of momentum in this thing. Once momentum decides to dry up, this could get ugly quickly. So we're not going to really waste too much time on this because really, for right now, there's really not much you can say about it. Looking at Micron, same kind of situation. Micron held the 8, broke, held the 21, bounced, reclaimed the 8. For right now, it's got the momentum behind it. But again, it's a $980 name. It's almost $1,000 name. How many shares of this thing are you buying? And options are not the reason to do it. Meaning, we should have said this with SNDK. Just because something is $1,000 or $2,000 and you can't afford a lot of shares because your account just doesn't have that kind of cash, options are not the reason to do it. You go into options if you're trying to manage risk, if you're playing a thesis or you're playing earnings, risk is premium paid. There are reasons to be in the option market. Being in the option market because the stock is too expensive on a relative basis to your account size is not a good enough reason to be there. Now, we're not talking about the people who are going to keep going in and jumping and doing whatever they want. You can never control those type of people. We're talking about from a professional trading atmosphere. If you're looking to make a go at this and you're looking to do a career, you're not looking to do lotto tickets, options are probably not the reason to be here. Because again, if it's so expensive in relative terms, it's $1,000 stock, a $2,000 stock, those are relatively expensive names from a price perspective, not PE ratios or any fundamental views, just from a pure price. The option market's not the place that you're going to find success. If you can't do it with a $50 name or a $100 name, why do you think you can do it with a $1,000 name or a $2,000 name? And that's really the question you have to ask yourself. Most people get into options, they're basically using them as lotto tickets. As the great Peter Lynch once said, stocks are companies. They're not lotto tickets. If you want to be a real trader, a professional trader, if you're approaching this from the vantage point of a gambling mentality, you're not going to have much of a career. You may get lucky, and you will get lucky, but you're not going to have a career. So the best advice we could say when it comes to these types of names is it's not so much the stock and it's not so much the name. Think of it like this. If you can't do it with 1 share, who says you can do it with 100 shares? It's the same concept. If you can't do it with a $100 name, then what makes you think you can do it with a $1,000 or $2,000 name? When you get into these momentum plays, you really have to be careful because once momentum goes and leaves these suckers, it can get ugly in a hurry. Okay. So we're not going to spend too much more time on this. Let's get into commodities. So we made another correlation and we wanted to talk about that. And that's going to be with oil. The red line is oil. The green line is corn. The blue line is sugar. Why are we bringing up this correlation? Corn and sugar are both used in ethanol products. So when oil is going down, a lot of times corn and sugar will go down. You can see they pretty much follow each other. Does it always happen that way? No. But for the most part, it usually does. So even if you go, let's say, out to a weekly, you can see pretty much follow each other. Again, red oil, green corn, blue sugar. So you can see that they basically follow each other to a certain extent. Is it tick for tick? No, but it does give you a little bit of an inkling of what is driving. So let's go back to the daily firm. You can see that when we were making this move early 2026, you could see how they all followed. Here went oil, then corn went, then sugar went. And then as we came in, sugar came in. As oil came in, sugar came in, corn came in. See the waves, how it's working. Now, granted, like we said, it's not tick for tick, but it gives you an idea of what is going on with other things. When you're looking at other markets, that are correlated with each other, you can find a way to put more pieces of the puzzle together. We're going to do this as an segment moving on with a couple of other things. We'll do it with bonds against stocks and other commodities against stocks and other commodities against other commodities, et cetera, et cetera. We think that this is going to be a good, useful tool moving forward on analysis level. So that's really what's going on with oil. So now let's get into the actual chart of oil and see what's going to happen here. Now, here's the problem with oil. The main issue with oil right now is the following. Everybody, to a large extent, who are very smart, are all calling for much, much higher prices. The paper asset is not listening. The paper asset is going down. Now, does that mean that they're wrong? No, it doesn't mean that they're wrong. It doesn't mean that they're wrong and that the paper asset is right. That's not what it means. We're of the belief that there is forces behind the scenes that are pushing the paper asset down. That's our belief. We could be wrong. It's a conspiracy theory to a certain extent. We believe that there is a force behind the scenes shorting this market and trying to keep price somewhat contained and pushing it down. We'll see what happens. We'll find out about it later on, but that's what we think. For right now, path of least resistance to a large extent is down. Now, here's the thing. If we get to midsummer, and that would be like mid-July, in about 30 days from now, and what the fundamentalists are saying comes to fruition, which is that we run out of oil because we are running into these kinds of problems. You can do a lot of online research. You can see what we are in terms of tank bottom, and et cetera, import exports, and et cetera, et cetera. Then oil will pop, and it's going to pop very aggressively. However, if they find a way to contain the damage and get things open and get things running, even if it takes longer than expected to get oil flowing around the world, the paper asset, which is the CL futures, are probably going to head lower. We're probably not going to see 100 again. If that plays out, if they can get the strait open, which regardless of whether it's open or not, if the perception is that it's open, if the perception is that shipping lanes are now functioning, then oil will not go back to 100. If for whatever reason, there comes a situation where that does not come to fruition, then oil will get back to 100 and we'll be back in the range of 105 to 90, 92, 93, and we'll see what happens over there. If a third scenario, if something else happens and they still can't get oil around the world, and in 30 days from now, we're at tanker bottom or line bottom or operational bottom where there is no more oil flowing to anybody, then we're back above 100 and we'll see where it goes from there. However, the thing that to know, and this is what's really important, is that all the people that were calling for $150, $200 oil, we never got above 100. We never really got above 130. It just never happened. You have here this high of 119.48 going back to March 9th. This high going back to April 7th of 117.63. The point we're trying to make is that we never really exploded. So because of that reason, you have to take a step back and say, these guys are saying things that make me think they're not wrong, but price for right now is not backing them up. As a trader, you make money on price. But you have to put together fundamental stories. You have to put together a lot of pieces. But at the end of the day, what's paying you is price. Thesis is not paying you. Okay? So that's oil. Let's get quickly to natural gas, because there really wasn't a lot happening in commodity land. To a large extent, it was really a little bit of a dead week this week. Natural gas holding $3.10, not really doing much. We'll move past it. Not going to really take too much time with that. Go into the grains quickly. Beans holding the 200. This is a customized 200. It's not a standard 200, but we are holding it. We think potentially maybe this holds and then we'll bounce back up to around 40-ish. We'll see. We would keep it on the radar. We think if this doesn't hold, then, your next stop is going to be about 1080, roughly 1080, 1070. We'll see. Let's look quickly at wheat, because these are the markets that we really can play. Wheat, constructive, holding this 570-ish area, 575, 580-ish area. If this doesn't hold, you got stop one over here around 568, 567-ish, and 556. So that's easy. Bounce back up to 610, possibly. This was some damage over here. One thing we've always said, and we'll say it again, with commodities, they're not like stocks. When they go, they just go, and they look for areas of where they need to find a home. That's why when you look out at commodity prices, for the most part, commodities are relatively stable. So let's just go quickly. Just look at a weekly, just quickly. Okay. You'll notice, yeah, there's pops here and there, but for the most part, they pretty much live in a certain area, and that's it. They just move between those areas as price needs to adjust. But for the most part, they stay relatively stable, and that's what you want. Okay. We'll look quickly at corn, and we'll get into some of the metals, some of the softs, and then we'll wrap it up. Okay. Corn breaking down a little bit more. There is a gap fill at around 400. We could get here. We don't think that's necessarily outside the realm of possibility. We're already in the gap. So we think 400 is probably going to be there, and we'll figure it out. Again, it's going to follow oil. We'll see what happens based off of that. What's interesting is gold. Our opinion is that gold is going to get to 3,800 at some point this year. We think it's going to be back there. It's not a question of being bullish gold. It's not a question of being bearish gold. It's just, we're looking at it from the price perspective, not from any fundamental drivers, not from dollar weakness or dollar strength or central banks. None of that matters. We're looking at it from the vantage point purely of price. Where could this thing go? We got to 41, we bounced. Does this bounce hold and we go back up? Or do we retest it and come back into 38? We think we're going to get to 38. So when you look at the weekly and you go, why are we picking 38? So when you look at 38, 38 was a level that we kept smashing into. We think 34 would be extreme, and that would put us back to basically where we were in Q1, Q2 of 2025. We don't think we're going to get back there. We think that would be a stretch, but we think 38 is possibly where we're going to get to. We were struggling a little bit at the 3,800 area. We think that's probably where we're going to go. Let's look quickly at silver. So you look at silver, we think silver, we'll just say it like it is. We think silver is probably going to get back down to the $50 area. We think next year it's back here at 35. It could obviously get there. This year, we don't think so. We think it's probably going to settle somewhere in the $50 area is where we think it's going to be. 45, $50 is where we think it's going. We don't see a reason to be bullish silver. That whole party of rip, that's over. It might vacillate over here in the 60 area, but we think eventually it's going to be in the 50s. The one that actually was an interesting trade, we were looking at it for a reversal, was platinum. Platinum was interesting in that regard. Again, we think this probably is going to trade down to around here in this 1,500 area, roughly. We think it's got some room to the downside. We shall see. Let's go to coffee. Had an interesting bounce. We think coffee's probably going to 220. We'll go to the weekly just to show. We think coffee's ultimately getting over here. We do not believe that this is the start of bullish news. Whether you're trading commodities or stocks or futures or crypto or whatever, when you have a igniting bar like you have over here on this weekly, if it's to the downside and you're bearish, you do not want to see more than 50% of that bar get taken back. So here you had a 50% move. We'll see what happens tomorrow. Why? When you have 50%, it shows commitment. If you get above 50%, it's showing that there's no commitment to that move. So you have to basically keep your eye on these bars to see where things go. So right now we're at the 50%. We'll see where it is tomorrow. So that's coffee. We'll look quickly at cocoa. Cocoa dead right now, not really doing much. Tradable, but just not really doing much. Okay, so now we're going to end off with something interesting. We're going to end off on SpaceX. How could you have traded SpaceX? Okay, a lot of people like to use 5-minute charts, so we're going to use a 5-minute chart. We're ending off with SpaceX. How could you have approached this? So number one, there was a couple of things you had. You knew right away your low on this bar. What was your low? Your low was 149.34. That was your low. You also knew that if you're going to trade an IPO, you have no information. So the only way you could really do it is you have to think to yourself, okay, what can I use? You can use a 5-minute, a 10-minute, or a 15-minute low. So you had your low basically locked in. Once that happened, then you're looking at it from the vantage point of, okay, what can I do? Do you jump in right away? The answer is no. The answer is 100%. You got to wait and see how this thing plays out. If you had waited about 15 minutes or so, 20 minutes or so, even a half hour, you had a tradable low. At 155.21, you had your low. You had it. And then it pretty much traded well all day long. Obviously, it had to move up and vacillating around and et cetera, et cetera. Trading IPOs is not for everybody. Trading IPOs is really difficult. Why? Because in order to trade an IPO, you go to a 10-minute, if you go to a 15-minute, just look at a 15-minute quickly. Okay. Here's your first 15-minute low. Here's your 30-minute low you could have traded against. That was 155.21. You could have used that. So there was plenty of things you could have done. Trading IPOs in general, especially IPOs like SpaceX, requires a different skill set. The skill set that it requires is, number one, discipline. Because here you're dealing with no information. You have no information whatsoever. So if you're not disciplined in this thing, and it's not just SpaceX, in any IPO, that's especially an IPO that's heavily touted like SpaceX, if you're not disciplined, you will get your clock cleaned. You can't trade them big. You have to trade them relatively small because there's a lot of orders hitting the tape. There's a lot of stuff going on. So you have to be really disciplined. The way to do it initially is you use a 5, 10, 15-minute low, and that's what you have something at least to trade against. After that, you're really, to a large extent, focused and dependent on your chart reading skills. You could sit here and say, all the order flow guys are going to say, we could just watch order flow and et cetera, et cetera. We're not going to have that debate. What we will say is on an IPO where there's a flood of orders coming because people need to get in, whether it's index guys or whatever it is, and there was a lot of retail that wanted in, you really have to really have your skills in check. If you don't, then we would advise staying away from IPOs. It's just not worth it. You could do it the next day, the day afterwards. It's fun. It's exciting. That's not what this job is about. This is a desk job. Thanks for watching, and we'll see you on the next one.